Good morning. Today is Thursday. We are into the second day of March, and the time right now Singapore is 11:46 in the morning. We have about 14 minutes more before noon. And overnight on Wall Street, we see continued weakness, but it end up as a mixed bag because we have Dow Jones that actually closed marginally higher, whereas the S&P 500 and the Nasdaq actually closed with marginal losses. But the tone of the market was actually set in Asia yesterday. Yesterday, we have the release of China Purchasing Managers Index, and they both came in better than expected. They boost Asian equity, but the same bullishness did not transfer all the way to even Europe or even the US, because in Germany we see that inflation is beginning to show sign of rearing its ugly head again. So that actually dampened the market sentiment somewhat going to the US session. So there we have it in Asia. On Wall Street, we can see that the Dow Jones itself actually broke below the confined range, which is marked by the level 32,661 to the high of 34,342. It was a marginal breach, but on a close-to-close basis, the market did not take out this low at 32,661. But the fact that it has actually attempted to do so actually is not very, very constructive, because on this basis we are already challenging the last December before the Christmas low. Okay, so we can say that market now has begun to look backwards. We have a very strong start to 2023. We have February that saw most of the losses actually basically retracing the entire January rally here, and then now we are into a new month. Yesterday was the first day of a new month, and the market did not perform very, very well so far. Okay, so the risk to the downside remains very, very high, although we cannot totally rule out the possibility of a rebound from here. But I think based on odds, I think the odds of market coming down further is a lot higher. And if the market does come down a little bit further, the nearest support I can see here for symmetric look at the symmetrical relationship between the high of 34,712. If we get a three-way pullback, the 100% retracement point is at 32,208. So we want to see how the market will react if and when the market actually come down to those levels. If it can hold out, well and good. That means it leaves the it could be a base from here and then propel higher. But if the market accelerate below 32,000, everything is gone, and then we can basically look to sell on every rebound. Okay, so now we look at the S&P 500, like I mentioned earlier on, where the Dow Jones actually closed with a marginal gain overnight compared to Tuesday's closing. But on the close-to-close basis, we can see that the S&P 500 is currently trading the lowest since January 25th. So this is definitely not a good sign. Market has pulled back 1.618%, which is extended fall, and this is laying the groundwork. And if the market can bounce here, I think the market may actually come back to this level again. That means market may take out 3,950 again one more time. Okay, so in that case, we have a very neat five-way down, and any rebound thereafter, we want to sell it, because there should be another equal leg depending on how deep this current decline from 4,195 actually ends up. So we could have an equal distance at the bare minimum to the downside. So we want to look for that completion of five-way followed by a three-way rally. And if the rally is going to be kept, then we want to be able to position for the next leg down, which is going to be quite substantial, because from a high of 4,200 to, let's say, 4,000. Okay, so we have about 200 points range. Okay, so 200 points in the S&P 500 can be quite massive if you can position it correctly. Okay, over in the Nasdaq itself, we can see that on the Nasdaq we have a slight, no, not this one. I want to show you the Nasdaq cash market. Market has a three-way pullback. So far, so good. The market managed to hold at 11,900 levels. But on a close-to-close basis, we are very, very close to one of the closest lowest close we have ever seen since the beginning of this year. So we can see that we are now back to January low. Okay, no, not January low, January 31st low. Okay, so we can see that this is a very neat three-wave. There is no extended decline so far, but if it does, the next level of support is going to be at 11,550. Okay, do watch out for an extended decline going forward. Like I said earlier on, the market action was actually centered on Asia yesterday, and Nikkei this morning actually see an attempt to rally, but so far the first half of the session for today managed to did not seems to be managing very well. Market did not manage to go much higher. There is a risk that the market may be kept at 27,655, and if the market do unravel from here, then a test of 27,050 is going to be what's on the card. Okay. However, the potential five-way structure here uh, is giving rise to the possibility that the market may have not finished this entire counter trend rally from 25,661. There is the possibility market may actually go beyond 27,821 eventually and may be kept around 28,200 levels. Okay, so that if that happens, that we have a very neat five-wave rally, and if that's the case, the market should pull back to this low level here one more time before you decide which way you want to go next. Okay, over in the Shanghai Composite Index, we can see a very clear breakout. This is the end of January low high, 3,310, and then throughout February itself, we see many numerous attempts to break beyond this level, and they have all failed except for today. Okay, so yesterday we have the release of the Purchasing Managers Report, which is, like I said earlier on, much better than market expected. So that gives the market the momentum to actually take the market higher. Now that the market has clearly taken out the 3,310 level, the next target will be at 3,372 and a half level. Okay, so this will be what we call a symmetrical relationship here. So this is the immediate target, but based on chart point, I think the next target will be 3,475. Okay, so maybe beyond here, the market may not actually end here. Maybe market may go up another 3 more points higher before it hits some kind of a roadblock. Over in the Hong Kong market itself, we can see that yesterday's rally in the Chinese stocks has also given the Hang Seng market a boost higher. And so far this morning, we can see that the market is still maintaining the slightly bullish outlook, because since China removed its zero COVID policy and reopened, we can see that factory activity has been humming along very well, and that gives rise to the idea that maybe Chinese economy may be creating the demand that the world needs, and that is actually playing out very well for their stock market. Okay, so Hong Kong is actually a beneficiary of that. So we will see how far this thing can go. I think personally, it would have problem going beyond the 21,250 levels. So I think this is the 50% mark. Okay, so do watch out for the possibility the market may be capped around the 21,250. Okay. Over in currencies, we can see that the dollar yesterday actually pulled back a little bit, and that gives rise to all the other major currencies actually managed to rally one more time. Market came very close to 107, and this is a three-wave rebound. And because it's a three-wave rebound, market couldn't go beyond that. So that gives the idea that maybe the rebound is over, and then maybe the currencies are getting ready to come back down. But I think there is a little bit of there may be one more set of three-wave to see, and I think ultimately the high that we should be contending with is probably at 108. Okay, maybe another 100 pips more to go. So wait for the market to do a very simple short-term pullback, and then another set of three wave to challenge 108. I think that will be perfect, and then look to sell around 108 levels. Over in sterling, we are seeing a slightly different picture here. The market did not do very much last night, despite the dollar coming down. The sterling did not go up very much. When you compare this with the euro dollar chart, it does look like the sterling is underperforming, and if the case, I think there will be a bit of a catch up for it to do. And if this is a three wave rally, equality will be pointing to 121.90 levels. Okay, so look out for another possibility of a market extending higher beyond 121.43 to go up to 121.86 thereabout. Okay, over in Aussie, the market is not doing very much. It's basically holding the line. Yesterday, market went up to as low as 0.67 and then slightly more, and then it hold out. And then what happened is that it ended up with a reversal pattern here within this very critical level of 0.6690 to 0.6730. So basically, this is a buy signal that I think we should heal it. Previously, I was short, and obviously, I didn't buy here. I actually closed up my position as the market was bottoming out here, because it hit a level here and then then suddenly stopped falling. I decided that's not a good sign, so I covered all my short position, but I did not go long because I still ultimately want to buy dollar and not sell dollar. So if that's the case, I'm waiting for a better signal to re-engage on the short side for against the currencies. Over in the dollar versus the yen, we can see that the dollar yen could be pointing to another fourth going forward. Market did a three-way, very simple three-way pullback to 135.25 yesterday, and this is, I think, too shallow. Maybe the market will do another three-wave, like I mentioned, in the euro versus the dollar. If that's the case, then maybe the good level to actually angle will be this level at 130 at 134. So if the market can do another set of three wave and then linger all the way down to 134, that would be a much better level to engage on the long side, because the market target for this move is at 139 for me. Over in dollar Canadian, we don't see much of any activity. The market was actually quite volatile. It went up, it came back down, so it was pretty volatile. But by and large, I think this market wants to go up. So I've actually gone back to buy. Did I buy? No. Sorry, I actually went in to sell euro versus the Canadian, because I think there's another leg coming, because this is so far an unfinished three leg formation. So if this is a three wave corrective pattern, then at the bare minimum we could be seeing 135.30, if not 135.15. So between these 15 pips range, I think the market may be actually looking to form a base here. So in a very short term, I'm really short, but I'm putting my stop just above 136.70. Okay. Over in the other commodities, we look at gold. Gold managed to recover to $1,844.70 overnight, and it has already met its immediate resistance, and this resistance is centered around $1,847.60. So we will have to see whether there is enough momentum for the market to go higher. I think there is, but we need to see a more decent pullback if the market, but on the condition market holds at this level at 1,823. Okay, if the market goes below 1,823, then maybe there's a different structure in play here. But ideally, we want to see a three-way pullback and then sits at 1,823, and then for market to actually propel higher. But again, for all realistic reason, I think either at 1,870, that will be I think where the market may hit. But most optimistic outlook calls for a 1,890, which I think at this moment is a little bit far-fetched, because so far it doesn't seem that it has a lot of momentum behind it. And of course, it's all tied down to the current weakness in the dollar. And if the dollar weakness is temporary, then the rise in gold is going to be also temporary. So do keep the overall perspective in mind here when you trade precious metals. Silver, we can see that silver has a less than committed rally here, and the market right now has a very minor three-way pullback. If you go down to the 1 hour, you can see this three-way pullback a little bit clearer. You can see that this is a very minor three-way, and it's not even complete yet. So by and large, I think the market still have a little bit more wiggle room downside at $20.78, and hopefully market can actually stabilize here and use that as a base to propel higher. But again, top side for this move here is about $21 and maybe 41 cents. Okay, so top side is actually quite limited. Okay, so do not go in to buy precious metal in a big way just yet. The time will come, I think, somewhere towards the end of April or in early May. Now, when we look at crude oil also managed to recover somewhat yesterday, and my view is that the rally that we are seeing, but we need the market to be a little bit stronger than this. Currently, the market rally has been very, how would I say, it's crawling higher. It's not like rallying. So we need to see a more robust move, like a big spike, one candle bar, we show a very significant spike. But right now, we are not seeing any of those. So that means the market is inherently not very strong. Okay, so do watch out if you are already long, which I am. So I'm hoping that the market may accelerate to the upside. First target will be $82.17. Ideally, the market can hit $84.83, because this will be a three-wave rally. So from the way that it's moving currently, it will take some time for the market to even break $80.60. So this is going to be somewhat of a wait. Okay. Over in crypto, we can see that Bitcoin and Ethereum actually is trying to burst higher. Yesterday, I did mention there's a near-term resistance line here that will determine the fate of this of this token here. So yesterday the market actually managed to do this three-way, but haven't quite hit its ideal target at 24,160. So the market actually now come back and sits at this resistance now and support. So I think the market has the criteria to actually challenge much higher. A break of 25,270 will point to a target of 26,300. So once the market reaches this level, be very careful, because the risk is that this could be the last leg of this entire move from the downside. And let me show you the daily time frame to give you a better look of this. This is a 5-wave pattern. Okay, so the market at this point itself has already completed somewhat its 5-wave pattern. So the risk of another surge beyond 25,270 may or may not come true. Okay, for all we know, the market may have already capped at 25,270 to complete this 5-way structure, but there is that possibility, because so far the pullback has been very corrective, and despite the weakness in US equity market, Bitcoin has been managing very well. It has been very resilient. So that gives the idea the market maybe have one more leg to go to test the 26,300. But be very careful. If the market failed to even hit this level and started to fall, take that signal, because the market can come back all the way here to $21,400. Okay, so that will be a massive pullback here, and that is quite normal based on the wave pattern that we are seeing. Over in Ethereum, we are also seeing a 5-way structure, 1, 2, 3, 4, 5, and the high of 1,742 may have already completed this 5-way structure. But based on the pullback so far, there may be another rally attempt. When we look at the 1-hour time frame, we can see that clearly the market has already taken out this near-term resistance line. Maybe not so much in the 1 hour, but 4 hours. You can see that the market has clearly taken out the resistance line, getting ready to move beyond 1,742. If it does, immediate target is at $1,811. Again, very, very careful. If and when the market comes anywhere near this price, be on the lookout for a sell signal, because the market can come all the way back to $1,463. Okay, so this could be the last leg of that move here. Okay, I am basically long Bitcoin, but I'm using a protective stop right now. No matter what happens, my position will be risk-free. Okay, but while we are seeing potentially bullish sign in both Ethereum and Bitcoin, the rest cannot be safe for the other token. Look at Solana. Solana has not shown any bullishness at all. In fact, it's probably going to come back down again. So again, this is the same pattern that we are seeing in the other coins. This is Cardano. Cardano is exhibiting no bullishness at all. So what I'm trying to emphasize here is that the current strength that we are seeing is apparently centered on Bitcoin and Ethereum. It is not across the board. So be very, very careful about chasing this market ever higher, because the market can actually do a very nasty about turn anytime. Okay, so this is all I have for you for today, and I shall see you tomorrow. Bye bye.